In 2023, Nigeria's fiscal policy took another bold step forward. The act was also signed into law by former President Muhammadu Buhari on May 28, 2023. The Finance Act 2023 was crafted with four main purposes in focus, which are to support the 2023 budget of fiscal consolidation and transition, to foster fiscal stability and sustainable growth, to improve tax administration, and to address challenges in the digital economy and emerging sectors. With over a dozen legislative updates, this act introduces new rules for capital gain tax, VAT, tertiary education tax, and excise duties, while repealing certain incentives that no longer align with Nigeria's fiscal goals. In this video, we will highlight the key amendments in the Finance Act 2023 by listing what changed from the previous act and the implications for business and professionals.
Hi, my name is Olatunji Abdulrazak. I am the founder and CEO of taxmobile.online. Welcome to my YouTube channel, A Stitch in Tax Saves Cash. This channel is dedicated to helping you stay on top of your taxes. We will provide you with tips and strategies to help you keep more money in your pockets and minimize your tax liability while you stay in compliance with tax laws. So, if you want to start taking control of your finances from today, hit the subscribe button below and click the notification bells to stay updated on our latest videos.
Let's consider the major amendments under each tax law. 1. Capital Gain Tax Act. Digital Assets Tax. 10% CGT now applies to profits from digital asset disposal. Capital Losses Deductibility. Losses are now deductible from gains of the same type. Unused losses can be carried forward for 5 years. Shares and stocks rollover relief. Reinvestment in eligible Nigerian shares required within the same year. 2. Companies Income Tax Act. Shipping and airline companies. Non-resident companies can now file returns without audited accounts if certified gross revenue statements and invoices are submitted. Regulatory bodies must now demand evidence of tax filing and tax clearance certificates before approval. On incentives, some notable ones are repealed, such as the Reconstruction Investment Allowance, Rural Investment Allowance, and the Hotel Tourism Reserve Fund incentive. Meanwhile, companies in the gas sector now enjoy unrestricted capital allowances for upstream and midstream operations. 3. Tertiary Education Trust Fund. The tertiary education tax rate has been increased from 2.5% to 3% of accessible profits. 4. Customs Excise Tariff Act. Levy on imports from outside Africa. And 0.5% levy now applies, helping Nigeria fulfill its financial commitment to multilateral institutions. Excise duties will now apply to services, although the exact categories will be spelled out by the President. 5. Value Added Tax Act. Anti-avoidance measures. The FRS can now adjust artificial transactions between related parties. VAT withholding agents. Agents must now remit VAT by the 14th of the following month. Imported goods VAT relief. If a non-resident VAT collection agent are appointed, there will be no double VAT. New definition of building. Mobile structures like masts and trailers are no longer VAT exempt. Petroleum Profit Tax Act. Alignment with Petroleum Industry Act (PIA) 2021. For tax calculations, instead of the old posted price, fiscal oil price will be used. The commissioning and abandonment fund contributions can now be deducted if cash backed. New penalties. 10 million naira for late filings and 2 million naira for each additional day. 15 million naira or 1% of undercharged tax for incorrect accounts. Increased fines for false statements. 7. Personal Income Tax Act. Deferred annuity premiums are now deductible if held for 5 years before withdrawal. 8. Stamp Duties Act. New EMTL revenue sharing formula: 15% federal government, 50% states, 35% local government. Corrupt Practices and Public Procurement Act. Increased penalties. Public officers signing on authorized contract now face a fine of up to 10 million naira. Public procurement rules tightened. They are now subject to approved procurement plans and ministerial guidelines. 10. Ministry of Finance Incorporated Act. Governance framework introduced. Governing Council, Executive Board and Management Team established for better operational efficiency. In summary, the Finance Act 2023 brought some major shifts, such as tertiary education tax increased to 3%, 10% capital gain tax now applies to digital assets, capital losses are now deductible, clearer rules have been set for digital asset taxation and VAT adjustment. Investment allowances for plant and machinery acquisition have been removed. VAT compliance now under revised deadlines and stronger anti-avoidance transfer pricing rules. Some smart steps to stay compliant and strategic include: companies must review tax compliance processes, especially regarding VAT, CGT, and penalties. Non-resident companies must prepare for VAT and simpler filing obligation under stricter FIRS oversight. Oil and gas companies should align decommissioning funding with cash-backed contributions to benefit from deductions. Businesses engaged in imports and services should budget for new levies and excise duties. Professionals should monitor further guidelines, especially for the digital economy and excise on services. Thank you for joining us on this enlightening journey. If you have any questions or want to share your thoughts, feel free to drop them in the comments below. And if you found this video helpful,
Don't forget to like, subscribe, and hit that notification bell for more insightful content. Also remember to watch our previous videos.